So again, let us have another discussion about PAS 8 on prior period errors. So this is the part 2 discussion about prior period errors. So this time, we are going to answer one comprehensive problem which includes both counterbalancing and non-counterbalancing errors. In the part 1 of this topic, prior period errors, we have discussed two separate problems for counterbalancing and non-counterbalancing errors. So this time, we are going to prepare financial statements which are misstated due to counterbalancing and non-counterbalancing errors. So let us start with the problem. So ABC Company has the following unaudited comparative financial statements. So looking at the problem, we have 2 years of financial statements. So this is a comparative financial statement. So 2020 and 2019. So the current year is 2019 and the earliest prior period presented is 2019 because our comparative financial statement only includes 2 years of FS. And since these are still unaudited, it means that the books are not yet closed because it is a common practice that the books shall only be closed if the accounts were all audited and adjusted accordingly. So it means that the books in 2020 are still open. It means that the nominal accounts in 2020, if there are misstatements, are still available for adjustments. However, for 2019 books, the nominal accounts are no longer available for adjustments because the nominal accounts in 2019 were already close to the retained earnings at the start of 2020. So that is why if we are to correct the net income or the nominal accounts in 2019, we can adjust the net income only by adjusting the retained earnings at the start of 2020. But for any corrections related to 2020 net income, we can still adjust or correct the nominal accounts. So since the errors are both counterbalancing and non-counterbalancing errors, so it involves misstatements on both real and nominal accounts. And since nominal accounts are affected, we are going to analyze the effects of the errors on net income and retained earnings. So the years that we are going to analyze include the current year, 2020, 2019. And of course, we're going to include the 2018 ending balance of the retained earnings because this is the beginning retained earnings in 2019. And if there are errors that occurred prior to 2019, the nominal accounts in those years were already close to the retained earnings at the end of 2018. So now let us start with the unadjusted balances of the retained earnings and net income. So starting with 2018. So what is the ending balance of retained earnings at the end of 2018? So looking at the statement of changes in retained earnings, the beginning balance of the retained earnings in 2019 is 1,500. So it means this is the ending balance of RE in 2018. And the net income in 2019 is 217. So our beginning retained earnings for 2019 is 1,500 and the net income in 2019 is 217. This is the unadjusted net income. Then our retained earnings at the end of 2019 is 1,617. So the 1,617 is not the total of 217 plus 1,500 because looking at the statement of changes in equity, we have a dividend payment. So it means that the retained earnings at the end of 2019 is already net of the dividends. However, we did not include additional column for the dividend payment because we are not going to analyze the dividends. Instead, we are going to focus on the net income and retained earnings. However, these operations can still be used when checking the correctness of the adjustments. So the ending retained earnings in 2019 is 1,617 pesos. Then the net income in 2020 is 155 pesos, and this is the unadjusted net income. So in 2020, our net income is 155, and the ending retained earnings for 2020 is 1,572. And again, this is taken from the statement of changes in equity, which is net of the dividends paid in 2020. So this is the retained earnings at the end of 2020. Now, since we are done with plotting the unadjusted balances of retained earnings and net income, let us now proceed to the additional information, which will give us the information about the errors committed by the entity. So let us start with letter A. So depreciation on building of 100 pesos was not recorded in 2018. So this error was in 2018. So it means that this was committed before the earliest prior period presented. Again, in our financial statement, the earliest prior period presented is 2019, and 2018 is before 2019. And according to the standard, if the error occurred before the earliest prior period presented, restating the opening balances of assets, liabilities, and equity for the earliest prior period presented. So it means that we need to restate the beginning retained earnings in 2019. So again, we are going to restate the retained earnings at the start of 2019 because we can no longer correct the depreciation or the nominal accounts in 2018 because as of 2020, the nominal accounts in 2018 were already close to the retained earnings. That is why if we are going to adjust the depreciation for 2018, what we can adjust is the retained earnings. So for letter A, what is the effect of the 100 peso depreciation that was not recorded in 2018? Of course, since depreciation is an expense account and expense has an inverse relationship with net income, if the expense was not recorded, it means that the net income in 2018 is overstated. And to correct the overstatement, we need to deduct the 100 pesos as a depreciation expense. However, as I have said, we can no longer adjust the depreciation expense. Instead, we are going to adjust the retained earnings. So, of course, the retained earnings at the end of 2018 includes the net income in 2018, which is overstated by 100 pesos. That is why the retained earnings at the end of 2018 is also overstated by 100. And to correct the overstatement, we need to deduct 100 pesos from the retained earnings in 2018. And the question is the 2018 error on depreciation have an effect on future net income? Of course, the answer is none, because any error in depreciation expense is considered as a non-counterbalancing error. Again, when we say non-counterbalancing error, only 1 year of net income is affected, and that is the year the error was made. And the subsequent years will not be affected by the error committed. However, the retained earnings in the succeeding periods will be misstated as long as the error is not yet discovered. That is why it is very crucial that a non-counterbalancing error should be determined in order to correct the retained earnings. So it means the 100 peso error in 2018 has no effect in the net income in 2019. However, the retained earnings at the end of 2019 is also overstated by 100 That is why we need to deduct again 100 pesos. Again, why do we need to deduct 100 pesos from 1,617? Because the 2018 net income is part of the 2019 retained earnings, which is overstated by 100. Then in 2020, again, it has no effect on the net income for 2020, but in retained earnings, it has still an effect. That is why we need to deduct again 100 pesos. Again, why do we need to deduct? Because the 1,572 is overstated by 100 pesos because the 2018 net income, which is overstated, is included in the retained earnings at the end of 2020. So let us proceed to the next error, letter B. So a payment of 360 pesos was expensed in 2019, which covers a 2-year magazine subscription starting April 1, 2019. So the 360 pesos is a magazine subscription which covers a 2-year period, which means that the 360 pesos should be expensed during the 2-year term. However, the entity recorded the 360 as expensed in full in 2019. So now let us analyze what is the effect of the 360 pesos error in net income and retained earnings. So let us use these computations to analyze the errors made by the entity and the correct accounts that should have been recorded by the entity. So since the magazine subscription covers a 2-year period, so that will be 24 months. And the subscription started on April 1, 2019. So which means that in 2019, there is 9 months worth of expense. Then in 2020, there should be a 12 months worth of expense. And in 2021, to complete the 24 months, there is a remaining 3 months. So again, the entity recorded the 360 pesos expense in full in 2019, which is the year of payment. However, using accrual basis, of course, the expense that should have been recorded in 2019 is 135 pesos. So that is 360 divided by 24 months multiplied by 9 months. So only 135 pesos should have been recorded as expense in 2019. And the difference between 360 and 135 for 225 pesos should be recorded as an asset, which is under the account prepaid magazine subscription. And the 225 pesos prepaid magazine subscription in 2019 is to be expensed in 2020 at 180 pesos and 45 pesos in 2021. However, the entity did not record any expense in 2020 and 2021. That is why in these years, the net income is overstated. But in 2019, the net income is understated. So now let us proceed to the analysis. Again, the net income in 2019 is understated because the expense recorded is overstated. So how much is the understatement of net income in 2019? So based on this analysis, the understatement of net income in 2019 is 225 pesos. Again, in 2019, the entity deducted 360 pesos expense. However, only 135 pesos should have been expense, which means that the expense recorded in 2019 is overstated, and it makes the net income in 2019 understated. So in order to correct the understatement in 2019 net income, we need to add back the 225 pesos. Again, the 225 pesos is to be expensed in 2020 and 2021. So now, for retained earnings at the end of 2019, since it includes the understated net income in 2019, It means that the retained earnings at the end of 2019 is also understated by 225 pesos. So it means we need to add back again the 225 to the retained earnings 2019. Then, to analyze the 2020 net income, the entity did not record any expense in 2020 related to the magazine subscription. However, 180 pesos should have been recorded by the entity, which means that the expense in 2020 is understated, making the 2020 net income overstated. So since the net income in 2020 is overstated, we need to correct the overstatement of 2020 net income. And to correct the overstatement, we need to deduct 180. Again, out of 225 pesos, only 180 should be expensed in 2020. That is why only 180 pesos should be deducted. The remaining 45 pesos shall be deducted in 2021 net income. So, what is the effect of this error in 2020 retained earnings ending balance? So, before we analyze, let us determine the adjustment based on the equations. So, 225 is equals to 225 plus negative 180 is equals to positive 45. It means that the retained earnings is understated by 45 pesos. So in order to correct the understatement, we need to add back the 45 pesos. And why is the retained earnings at the end of 2020 understated by 45 pesos? Again, based on this computation, the entity as of the end of 2020 has already recorded a 360 expense. However, the correct amount of expense that should have been recorded by the entity as of the end of 2020 is only the total of 135 and 180, and that is 315 pesos, which is lower by 360 for 45 pesos. Again, because the 45 pesos is to be expensed in 2021. So it means that the expense recorded in the retained earnings 2020 is greater than by 45 pesos. That is why the retained earnings is understated by 45 pesos. And that is the reason why we added the 45 to correct the understatement of the retained earnings at the end of 2020. Now let us proceed to letter C, the third error. So the entity failed to adjust the allowance for bad debts at year-end of 2019 to equal to 2% of outstanding balance of accounts receivable. So based on our statement of financial position, the outstanding accounts receivable at the end of 2019 is 300 pesos. And the 2% of the accounts receivable of 300 pesos is 6 pesos. It means that the allowance for bad debts at the end of 2019 should be at 6 pesos. However, the allowance presented is only at 1 pesos, which means the net realizable value of the accounts receivable is overstated. So again, to analyze the effects of the error, so let us use this computation. So again, as we look into the statement of financial position, the allowance for bad debts unadjusted balance in 2020 is 10 pesos and 1 peso in 2019. And again, the adjusted balance of the allowance for doubtful accounts at the end of 2019 should have been at 2% of 300 pesos, and that is 6 pesos. However, the allowance for bad debts in 2020 is still correct at 10 pesos. So we need to adjust the ending balance of the allowance for bad debts. From 1 pesos, it should be recorded at 6 pesos. It means we need to increase the allowance for bad debts in 2019 by 5 pesos. So increasing allowance for bad debts entails increasing bad debt expense. So that is why the bad debt expense in 2019 should also be increased. So if the bad debt expense in 2019 shall be increased by 5 pesos, what is the effect of this error in the 2020 net income? So the 2020 bad debt expense is currently recorded at 9 pesos. So this is the unadjusted balance. Again, the bad debt expense is computed as ending balance of allowance for bad debts less beginning balance in case there is no accounts receivable write-off. And this is only used under the allowance method, under the outstanding balance of accounts receivable method. However, since the beginning balance of the allowance for bad debts in 2020 is increased from 1 peso to 6 pesos, it means the bad debt expense to be recorded in 2020 will be revised. Again, the computation of bad debt expense, assuming there is no accounts receivable write-off, is ending balance less beginning balance. So that is 10 pesos less 6 pesos is equals to 4 pesos. So it means that the 2020 bad debt expense should be decreased from 9 pesos to 4 pesos. Again, for letter C, the 2019 bad debt expense should be increased by 5 pesos. And if we need to increase the expense by 5 pesos because the bad debt expense in 2019 is understated, it means that the net income in 2019 is overstated. So if the net income in 2019 is overstated, to correct an overstatement, we need to deduct 5 pesos. And in retained earnings 2019, it is also overstated by 5 pesos. Because again, part of the 2019 retained earnings is the net income in 2019. Then for the 2020 net income, the bad debt expense should be decreased by 5 pesos because from 9 pesos of bad debt expense, we need to decrease it to 4 pesos. Therefore, it should increase the net income. So to increase the net income, we need to add 5 pesos. And that is equals to 0. So if you can see, the first error, letter A, is a non-counterbalancing error. So that is a depreciation. However, for letter B and letter C, these are both counterbalancing error. In letter A, the error only affected 1 year of net income, that is the 2018. But for letter B and letter C, it affected 2 or more years of net income. And again, in order for an error to counterbalance or to self-correct, it needs to affect 2 or more years of net income. So in letter B, the net income affected are 3 years. So it includes 2019, 2020, and 2021. Because in 2021, we should still recognize a 45 pesos subscription expense. However, the entity failed to record the 45 peso expense in 2021 because again, the 360 pesos magazine subscription was recorded in full in 2019. So in letter B, the number of years affected is 3 years. But for letter C, the number of years affected is only 2. That is why at the end of the 2020, the retained earnings is already correct. But for letter B, the error will be fully corrected at the end of 2021. So now let us proceed to the fourth error, so letter D. The notes payable is a 2-year 10% interest-bearing note with interest payable semi-annually starting April 1, 2019. The entity records the interest only when paid. So obviously, based on the statement, the error of the entity is the timing of recording of the interest expense because the interest expense is being recorded upon payment. However, that is incorrect under accrual basis because under accrual basis, interest expense should be recorded paid on a semi-annual basis, so which means it is every 6 months. So if the first payment is April 1, 2019, it means that it is the first payment 6 months after the issue date. So if April 1 is the first interest payment, the issue date is October 1, 2018. So it means that the interest expense should have been recorded starting 2018. So again, let us use this computation in the analysis of the error on interest. So the notes payable has a 2-year maturity. It means that the interest should be recorded in 2 years. So that will be 24 months starting the issue date, which is on October 1, 2018. So in 2018, the months the interest were incurred is 3 months. In 2019, we have 12 months, and in 2020, we have 9 months, which is until October 1, 2020, the maturity date. So, based on the problem, the entity records interest upon payment, and since the first payment is in 2019, it means that the interest paid in 2019 is 200 pesos. So the interest of the notes payable is 10%, and the face value of the notes payable is 2,000 pesos. So that is why the annual interest expense is 200 pesos. And the total payments of interest in 2019 is 200 pesos. So that is 100 pesos on April 1, 2019, and another 100 pesos, which is the second semi-annual payment, on October 1, 2019. So the total interest payment in 2019 is 200 and another 200 in 2020. So that is for April 1 and October 1, 2020. However, there was no interest expense recorded in 2018 because there were no payments in 2018. However, under the accrual basis, again, interest should be recorded when incurred. So we have incurred 3 months of interest in 2018. That is why we need to record the interest expense of 50 pesos in 2018, then 200 in 2019, which is equals to 12 months, and 150 in 2020, which is equal to 9 months. And since in 2018 we have recorded an interest expense of 50 pesos, it means we need to record an interest payable of 50 pesos. As well as on December 31, 2019, we also need to record an interest payable of 50 pesos. So this 50 pesos covers the interest on October, November, and December of 2019, which is payable on April 1, 2020. So again, for letter D, this is the understatement of 2018 and 2019 interest payable. So again, based on this schedule, the 2018 interest expense is understated because we have not recorded any interest expense. So that is why the net income in 2018 is overstated. So if the net income in 2018 is overstated, it means we need to deduct 50 pesos. However, the 2018 nominal accounts are already closed, so what we can adjust is the retained earnings at the end of 2018. So it means that the retained earnings at the end of 2018 is also overstated. And in order to correct the overstatement, we need to deduct 50 pesos. Then in 2019, the entity recorded 200 pesos, and that is the interest payment in 2019. And the number of months incurred in 2019 is 12 months, That is why under accrual, the interest expense that should be recorded is 200 pesos, which in this case, both the expense recorded and the correct amount of interest expense are similar. So that is why there is no misstatement in the net income and interest expense in 2019. So again, the interest expense is correct as recorded in 2019. That is why the net income, as far as the interest expense is concerned, is correct. That is why there is no adjustment in the 2019 net income. However, for the retained earnings at the end of 2019, this is overstated again by 50 pesos. That is why we need to deduct 50 pesos. Again, to prove mathematically, that is negative 50 plus 0 is equals to negative 50. And why is the retained earnings in 2019 overstated if the net income in 2019 is already correct? So the overstatement of the retained earnings in 2019 pertains to the unrecorded interest expense that was incurred in October, November, and December of 2019, payable on April 1, 2020. That is why it is not yet paid, hence it is not yet recorded by the entity. And since it is not yet recorded by the entity, it is not yet deducted from the net income. Hence, the retained earnings is overstated. That is why to correct the overstatement, we need to deduct 50 pesos. Now, let us analyze the effect of the error in 2020 net income. So, the expense recorded by the entity is 200, that is in 2020. However, the number of months incurred in 2020 is only 9 months. It means that the interest expense should be recorded only for 150 pesos. So this time, the interest expense recorded by the entity is greater than 50 pesos. That is why the net income in 2020 is understated by 50 pesos. So again, in 2020, the entity recorded 200 pesos instead of 150 pesos. That is why the expense is overstated and the net income is understated by 50 pesos. And in order to correct the net income's understatement, we need to add 50 pesos. Then, by the end of 2020, the retained earnings is already correct. So that is negative 50 plus 0 is equals to negative 50 plus positive 50 is equals to 0. And again, why is the retained earnings at the end of 2020 already correct? Because the maturity of the notes payable is on October 1, 2020, which means that all interests have already been paid and all interest expense have already been recorded. Now let us proceed to letter E. So sales in 2019 includes a cash collection of 500 pesos from customers for goods to be delivered in 2020. So again, for letter E, this is an overstatement of 2019 sales because the 500 sales is recorded in 2019. However, since the goods are still to be delivered in 2020, the sales should have been recorded in 2020 and not in 2019. So it means that the 2019 net income is overstated because the sales is overstated. So in order to correct the overstatement of 2019 net income, we need to deduct 500 pesos. And of course, since the 2019 net income is part of the retained earnings in 2019, we also need to deduct 500 pesos from the retained earnings at the end of 2019. And since the 500 pesos was delivered in 2020, it means the sales should be recorded in 2020. However, the entity failed to record sales in 2020. That is why the net income in 2020 is understated. And in order to correct the understatement in 2020 net income, we need to add the 500 pesos and record it under the sales account. And since the error in 2019 affected 2 years of net income, so that is an overstatement in 2019 and an understatement in 2020, it means the retained earnings at the end of 2020 is already correct and there is no need for any adjustments. It means that the error has already counterbalanced at the end of 2020. So this means that any error on sales is considered as a counterbalancing error. And to prove that mathematically, that is negative 500 is equals to negative 500 plus positive 500, that is 0. So let us proceed to letter F. The entity's accountant records goods in transit purchased on account upon receipt of invoice before year end. Goods in transit FOB destination as of the end of 2020 and 2018 are 130 pesos and 80 pesos respectively. These goods were not included in the physical count. So since these are goods in transit and these were purchased FOB destination, it means that the entity is the buyer and the ownership will only be transferred to the buyer upon receipt of the goods. However, since these are still in transit, the goods are to be received the following year. So it means that these goods should have not been recorded as purchases at year end and it should not include in the inventory. So these goods were not included in the physical count, so it means that it is not recorded as part of the ending inventory that was presented in the statement of financial position. However, these goods were recorded as purchases before the actual receipt, so it means that the purchases are overstated. So again, the goods in transit amounted to 130 pesos in 2020 and 80 pesos in 2018. So let us start with 2018. Again, the goods in transit in 2018 is 80 pesos. And since these were already recorded as purchases in 2018, though the goods are still to be received in 2019, it means that the purchases in 2018 is overstated. And we all know that purchases is part of the computation of cost of goods sold. So if the purchases is overstated, it means that the cost of goods sold is also overstated. And if the cost of goods sold is overstated, the net income is understated. So it means that in 2018, if the purchases is overstated by 80 pesos, the net income is understated by 80 pesos. So in order to correct the net income in 2018, we are going to correct the retained earnings at the end of 2018. So in order to correct the understatement of 2018 retained earnings, we need to add 80 pesos. And again, this is the cost of goods in transit by the end of 2018. So in 2019, is the 80 pesos have an effect in the 2019 net income? So the answer is yes, because the 80 pesos is a counterbalancing error. So it means that in order to counterbalance, it must affect 2 or more years of net income. So the first net income that was affected is 2018, and 2019 is still affected because the purchases should be recorded in 2019 because the terms of the purchase is FOB destination. So if the 80 pesos was received in 2019, it means that the purchases should have been recorded in 2019 and it should be included in the cost of goods sold for 2019. However, the entity failed to record purchases in 2019. That is why the purchases in 2019 is understated. Therefore, the cost of goods sold is also understated, which makes the net income in 2019 overstated by 80 pesos. So to correct the overstatement of the net income in 2019, we need to deduct 80 pesos. And this means that the 80 pesos has already counterbalanced at the end of 2019 retained earnings. So that is 80 pesos minus 80 pesos, that is equals to 0. So since the 80 pesos has already counterbalanced at the end of 2019, it means it has no effect in 2020 net income and retained earnings. So now let us proceed to 2020. So the goods in transit for 2020 is 130 pesos. So same analysis as in 2018. The goods should be recorded as purchases in 2021 because the goods in transit as of 2020 are not yet received, so it will be received in 2021. But since the entity already recorded the goods as purchases in 2020, it means that the purchases account in 2020 is overstated. Therefore, the cost of goods sold is also overstated and the 2020 net income is understated. So since the net income in 2020 is understated, we need to correct the understatement by adding 130 pesos. And that is by reversing the purchases or decreasing the cost of goods sold. And of course, since this is the year the error was committed, the retained earnings is still incorrect. So the retained earnings, similar to the net income in 2020, is also understated. So the understatement of 2020 retained earnings can be corrected by adding 130 pesos. Now let us proceed to the last error. So letter G. The sales account includes the sale of an equipment in 2020 for a cash proceeds of 370 pesos. The carrying amount of the equipment sold is 500 pesos with an accumulated depreciation of 100 pesos. So based on the problem, the entity recorded the cash proceeds as sales. So it means the entry recorded by the entity is a debit to cash at 370 pesos and credit to sales at 370 pesos. However, as we all know, this is not the correct entry in recording a sale of equipment, which is a fixed asset, and not an inventory. The correct journal entry should be a debit to cash for 370 pesos, and we need to derecognize the equipment account. The cost of the equipment is 500 pesos, and the related accumulated depreciation is 100 pesos, and that is to be debited. So since the cash proceeds from the sale is 370 pesos and the book value is 400 pesos, that is 500 less 100 pesos, so the loss on the sale of equipment is 30 pesos. So that is 370 pesos less 400 pesos. So this is the correct journal entry that the entity failed to record. The only account recorded that is correct is the debit to cash. Then the rest are all incorrect. So for letter G, since the cash proceeds was recorded as sales, it means we need to deduct 370 pesos from net income in 2020, and that is the cash proceeds from the sale. And also, the retained earnings at the end of 2020 is also misstated by 370 pesos, where the cash proceeds was recorded as a sale. So that is negative 370 pesos. However, since the sale resulted to a loss of 30 pesos, the entity also failed to record the loss on the sale of equipment at 30 pesos. So it means that the net income in 2020 is again overstated by 30 pesos because the loss on sale was not recorded. So in order to correct the understatement of loss on sale, we need to deduct 30 pesos from net income because the understatement of loss resulted to the overstatement of net income. And again, since the 2020 net income is overstated, the retained earnings 2020 is also overstated, which means we need to adjust the retained earnings at the end of 2020 by a deduction for 30 pesos. So this ends the analysis of the effects of the errors on retained earnings and net income for the years 2020, 2019, and 2018. So let us now determine the adjusted balances of each item. So starting with 2018, the retained earnings has an adjusted balance of 1,430. Then the adjusted balance of net income in 2019 is a net loss of 143 pesos. Then in 2019, the retained earnings adjusted is 1,187. Then in 2020, the adjusted amount is 260 pesos, which is still an income. Then at the end of 2020, the retained earnings has an adjusted balance of 1,247 pesos. Now let us proceed to the correcting journal entries. So the correcting journal entries shall be prepared as of December 31, 2020, and this shall be recorded in the books of the entity. Again, since the current year is 2020 and the errors were discovered in 2020, it means that before the preparation of the financial statements in 2020 or before the nominal accounts are closed in the retained earnings, the entity should record corrections before the preparation of 2020 financial statements. So it means that the books of 2020 are still open. So we can still adjust the nominal accounts in order to correct the net income. However, for errors that were committed in 2019 and 2018, we can no longer use nominal accounts to correct those net income. However, we can still adjust the retained earnings at the start of 2020, and that is the retained earnings ending in 2019. Again, if we are going to correct the 2019 and 2018 net income, we are going to correct the beginning balance of the retained earnings for 2020. So which means our journal entries will be taken from these two columns of our table. So to correct the net income in 2020, these columns will be used where we will use nominal accounts. And to correct the errors in 2018 and 2019, we are going to use these columns. And we are going to use only one account, which is retained earnings. So let us start with letter A. So letter A is understatement of 2018 depreciation. And looking at these two columns, the adjustment only pertains to the retained earnings, which is a deduction. So which means this is a debit to retained earnings. So that is why our entry is debit retained earnings beginning for 2020 at 100 pesos. And the credited account is accumulated depreciation for building. That is a credit to 100 pesos. Again, since this is an understatement of 2018 depreciation, it means that the entity failed to record a debit to depreciation expense and credit accumulated depreciation. So which means that the accumulated depreciation account is as well understated. So in order to correct the understatement of the accumulated depreciation, we need to credit accumulated depreciation for 100 pesos. Now let us proceed to letter B. So letter B is understatement of 2019 prepaid subscription. Again, we are going to look in these two columns. So the first adjustment is 225 pesos. This is an increase in retained earnings, so that is a credit. And a decrease in net income for 180 pesos, and that is a debit to a nominal account. So which nominal account should be debited that is related to prepaid subscription. So of course, the nominal account is an expense account. So that is magazine subscription expense. So our entry would be a credit to retained earnings beginning for 225 pesos. Again, the retained earnings beginning is the beginning balance as of 2020. Then a nominal account to be debited for 180 pesos. That is the magazine subscription expense at 180 pesos. So there is a remaining 45 pesos. So what is the 45 pesos to be debited? That is the prepaid magazine subscription at 45 pesos. Again, the 45 pesos is still considered as a prepayment as of the end of 2020 because this is still to be recorded as an expense in 2021, which covers January until April 1. So now let us proceed to letter C. So in letter C, this is an understatement of 2019 allowance for bad debts. And our journal entry is a decrease in retained earnings, so that will be a debit to retained earnings, and an increase in net income for 5 pesos. So it means a credit to a nominal account. So what nominal account is related to bad debts? So that is the bad debt expense. So our journal entry for letter C is debit retained earnings beginning. Again, that is the decrease in retained earnings for 5 pesos and a credit to bad debt expense for 5 pesos. Now let us proceed to letter D. So for letter D, this is the understatement of 2018 and 2019 interest payable. So looking at these two columns, this is a decrease in retained earnings for 50 pesos, so that is a debit, and an increase in net income, so we are going to credit a nominal account to increase net income. And the nominal account should be related to interest, and that is interest expense. So let us start the journal entry for letter D. So that will be a debit to retained earnings beginning for 2020 at 50 pesos and a credit to interest expense for 50 pesos. Now let us proceed to letter E. So letter E is overstatement of 2019 sales. And looking again into these two columns, this is a decrease in retained earnings for 500, so that will be a debit to retained earnings, and a credit to a nominal account to increase net income for 500 pesos. And what nominal account is related to sales? Of course, that is the sales account. So we are going to debit retained earnings beginning for 500 and credit sales for 500 pesos. Now let us proceed to letter F. So this is the overstatement of purchases in 2018 and 2019. So in 2018, as we look into these two columns, there are no related adjustments for net income in 2020 and retained earnings. So it means in 2020, there will be no adjustments related to the overstatement of 2018 purchases. But for 2020 purchases, we have an adjustment to net income, which is an addition of 130 pesos. And there is no adjustment as to the retained earnings. So in order to increase the net income in 2020, we are going to use a nominal account, and that will be a credit. So what is the nominal account? That is related to purchases. So that is a credit to purchases. But we are going to use the cost of sales account since credit to purchases is a decrease in cost of goods sold. So instead of crediting purchases, we can also credit cost of goods sold. So our entry would be a credit to cost of sales for 130 pesos. So what account should be debited? So since the purchases were already recorded in 2020, so it means that the entry recorded is a debit to purchases for 130 and credit 130 under accounts payable. However, since the goods were not yet received, it should have not been recorded under the accounts payable. So it means it is not yet a liability. So So to correct the overstatement of the accounts payable, we need to reverse the accounts payable. That is why the entry is debit accounts payable for 130 pesos. Then letter G, the last journal entry. So this is the overstatement of 2020 sales. So in these two columns, only the net income has an adjustment. So that is a negative 370 pesos. And again, what is the nominal account to be used that is related to sales? So that is, of course, sales. So it means we need to debit sales for 370 pesos in order to decrease net income. And again, under letter G, there is also an understatement of loss on sale, and that is 30 pesos. It means we need to again decrease net income by 30. So we need to debit another nominal account, which is loss on sale of equipment for 30 pesos. And since the entity did not record the derecognition of equipment and the accumulated depreciation, we need to record the derecognition of those accounts. So that will be a debit to accumulated depreciation for 100 pesos and the cost of the equipment as a credit to 500 pesos. So these are the correcting journal entries that will be made as of December 31, 2020. So take note that if both net income and retained earnings has similar amount of adjustment, the accounts to be used in the journal entry is retained earnings to adjust the retained earnings and a nominal account in order to adjust the net income. However, if the adjustments in the two columns are not equal, the remaining account to be used is either an asset or liability in order to balance the journal entry. So that is applicable to letter A, letter B, letter F, and letter G. So if you look into letter A, the adjustment is only in retained earnings, so they are not equal. That is why to balance the journal entry, we used an accumulated depreciation account, which is a contra asset account. Then in letter B, the adjustments in net income and retained earnings is again not balanced. And in order to balance the journal entry, we used an asset account, which is the prepaid magazine subscription. And in letter F, only the net income has an adjustment. That is why in letter F, we use the liability account, which is accounts payable, in order to balance the journal entry. And in letter G, only net income has an adjustment. And in this case, we used equipment and accumulated depreciation, which is an asset and contra asset account. But for letter C, letter D, and letter E, since the adjustments are both equal, the account titles to be used in the journal entry are retained earnings and a nominal account. So there will be no asset nor liability. So now let us start the preparation of the adjusted financial statements for 2020. So first, let us start with the unadjusted balance. So the unadjusted balances were taken from the information provided in the problem. So the differences between the two are, in the income statement section, I have included another row for the loss on sale of equipment because in our journal entries, we have an adjustment related to the loss on sale of equipment in 2020. Then in 2020 Statement of Financial Position, I've added another row for prepaid magazine subscription because again in our correcting journal entry, the prepaid magazine subscription is recorded. That is why it will be presented in the adjusted statement of financial position. Then all other accounts were taken from the information in the problem. So now, after we started the unadjusted balances, let us now post all the correcting journal entries that we have prepared. So we have 7 correcting journal entries that were made on December 31, 2020. So in order to facilitate the posting process, I will use a formula in order to quickly post the debits and credits. So these are the amounts posted to our working paper. So these are the net effect of our correcting journal entries. So since our working paper is presented in financial statement format and not in a trial balance format, to ensure the correctness of the balance of the total debits and credits in our posting process, this is the procedure to be followed. So for the total debits and credits in the income statement section, the total debit is 580 pesos and the 685 pesos is the total credit in the income statement section. And since nominal accounts are close to the retained earnings, that is why the 580 pesos is close to the debit side in the statement of changes in retained earnings section, as well as the 685 pesos total credit is close to the credit side of the statement of changes in retained earnings section, because this debit and credit is adjusted to the 155 pesos net income in the income statement. And of course, the 155 pesos is close to the retained earnings in the statement of changes in retained earnings. So basically, this row have the same balances. Again, the 580 and 685 in the debit and credit section of the statement of changes in retained earnings were taken from the total debit and total credit in the income statement section. Then the amount in the debit side in the retained earnings beginning in the statement of changes in retained earnings section is taken from the total of all debits to retained earnings in letter A, letter C, letter D, and letter E. So 100 plus 5 plus 50 and 500 has a total of 655 pesos. Then the credit to 225 is the credit to retained earnings beginning in letter B. Then we get the total of the debits and the credits in the statement of changes in retained earnings, so that is 1,235 and 910. And these two amounts are adjustments to the 1,572 pesos unadjusted retained earnings. And since the retained earnings ending appears in the equity section in the statement of financial position, which in this case in the lower part of the statement of financial position, of course, the adjustments of 1,235 in the debit side should also be transferred in the debit side of the statement of financial position under retained earnings, as well as the total credit of 910 should also be transferred to the credit side in the statement of financial position, again under retained earnings, so that these two amounts will also adjust the 1,572 pesos retained earnings unadjusted that appears in the statement of financial position. So to determine whether the adjustments are balanced, so the total debits in the statement of financial position is 1,510, as well as the total credits in the statement of financial position. Now let us determine the adjusted balances. Let us start with the income statement. So our sales is 3,130 pesos. So this is the adjusted sales. Then the cost of sales is 510 pesos and our adjusted gross profit is 2,620. Then since there are no adjustments affecting salaries, rent expense, and depreciation for 2020, so same amount would be extended to the adjusted column. Then for the bad debt expense, since we have an adjustment of 5 pesos, the bad debt expense will decrease to 4 pesos. Then the magazine subscription expense is 180. Then we have recorded a loss on sale of 30 pesos and the interest expense is 150 pesos. Then the adjusted net income is 260 pesos. Then in the statement of changes in retained earnings, the beginning balance has an adjusted amount of 1,187 pesos. Then the adjusted net income, of course, is the 260 pesos adjusted net income as presented in the adjusted income statement, then the dividend declared is 200 pesos. That is why our ending retained earnings is 1,247 adjusted. Then in statement of financial position, our cash balance, accounts receivable, allowance for bad debts, inventory, and supplies are the same with the unadjusted column because there are no adjustments affecting these accounts. But for prepaid magazine subscription, so we have an adjusted balance of 45 pesos. Then the equipment has a balance of 500 pesos. Then the accumulated depreciation is 100. Building is 5,000. Accumulated depreciation for the building is 400. Then the land is at 3,000 pesos. Then the total assets adjusted for 2020 is 9,505. Then the accounts payable is 2,258. Then we have no notes payable. The share capital is 6,000. Then the retained earnings is 1,247 pesos. Then the total liabilities and shareholders' equity adjusted for December 31, 2020 is 9,505. Now, after we're done with 2020, we can now prepare the financial statements in 2020. However, since the 2020 financial statements must be comparative with 2019, and the available information in 2019 is the unadjusted amount, the 2019 that will be presented side by side with 2020 balances should already be restated based on the correcting entries. Again, since the earliest prior period presented is 2019, all account balances in 2019 that were affected by the error should be restated. And any errors that occurred before 2019, the earliest prior period presented, the opening balances of the assets, liabilities, and equity for the earliest prior period presented, which in our problem is 2019, should be restated. Again, for any errors that occurred before 2019, we need to restate all beginning balances. So it means that we need to restate all the account balances in 2019 that were affected by the errors, as well as the beginning balances for the errors that occurred before 2019. Since the available information in 2019 are the unadjusted account balances, we need to adjust the 2019 balances in order to determine the restated accounts to be presented beside 2020. So in order to present the revised or the restated 2019, we need to prepare journal entries. So these are the correcting journal entries to be prepared as of December 31, 2019. However, these correcting journal entries are not recorded. Again, these journal entries are not recorded because we already prepared correcting journal entries as of December 31, 2020. And those are the adjusting entries that will be recorded in the books. This journal entry that we're about to prepare is only for the sake of determining the restated balances in 2019. That is why this is only a working paper journal entries. Again, this will not be recorded in the books. So since we are going to restate the income statement and the balance sheet of the 2019 financial statements, we will assume or we will pretend that the books in 2019 are still open for adjustment. So it means for this purpose, we can adjust the net income in 2019, and that is by adjusting the nominal accounts. But for errors that occurred before 2019, of course, we can no longer use nominal accounts in the adjustment. Instead, we are going to use retained earnings because as far as 2019 is concerned, all errors that occurred prior to 2019 were already reflected in the retained earnings at the end of 2018. So based on our table, the journal entries will be taken from these columns. So for 2019, the adjustments will be taken from these last two columns. So let us start with the first correcting journal entry. So this is letter A. So in letter A, there is no adjustment in net income, and there is an adjustment in retained earnings, which is a deduction. So it means this is a debit to retained earnings. So the first account to be recorded is a debit to retained earnings beginning for 100 pesos. So this time, the retained earnings beginning pertains to beginning in 2019. So that is 100 pesos. And again, since the adjustments in net income and retained earnings are not balanced because there is no adjustment in net income, it means we are going to use either an asset or a liability account in the credit side. Of course, the account to be credited should be related to depreciation, and that is accumulated depreciation. So our next account to be credited is accumulated depreciation for building 100 pesos. And this is because the error is an understatement of 2018 depreciation, which means that if the 2018 depreciation is understated, it means that the accumulated depreciation in 2018 is also understated. That is why, in order to increase accumulated depreciation, our correcting journal entry should include a credit to accumulated depreciation building for 100 pesos. Next is letter B, correcting journal entries. So based on our table, only net income has an adjustment. So there is no adjustment in 2018 retained earnings. So it means that increasing net income by 225 requires a credit to a nominal account. So that will be related to prepaid subscription. So that is magazine subscription expense for 225 pesos. So that is to decrease magazine subscription expense in order to increase the net income by 225. And again, since the net income adjustment and retained earnings adjustments are not balanced, it means the account to be debited is either an asset or liability. So in this case, the account to be debited is prepaid magazine subscription, which is an asset account. So that is 225 pesos. Then for the third correcting journal entry, that will be letter C. So that is understatement of 2019 allowance for bad debts. So our adjustments only pertains to net income, and that is a deduction for 5 pesos. And there is no adjustment to retained earnings. So the deduction of 5 pesos from net income requires a debit to a nominal account. So of course, the nominal account related to bad debts is bad debt expense. So by decreasing net income entails increasing the bad debt expense for 5 pesos. And again, since the adjustments of net income and retained earnings are not balanced, the account to be credited is either an asset or a liability. And since this is related to bad debts, the account to be credited is the contra asset account, which is the allowance for bad debts for 5 pesos. Again, this is because this is related to the understatement of allowance for bad debts in 2019. So if the allowance for bad debts in 2019 is understated, so in order to increase the allowance for bad debts, we need to credit allowance for bad debts for 5 pesos. The next is letter D, correcting journal entry. So that is the understatement of 2018 and 2019 interest payable. So based on these two columns, the column that has an adjustment is the retained earnings, and that is a negative 50 pesos. However, for net income, there is no adjustment. So for the retained earnings deduction of 50 pesos, that will be a debit to retained earnings. So for letter D, our debit is retained earnings beginning in 2019 for 50 pesos. And since the adjustments are not balanced, the account to be credited is either an asset or liability. And since the error is related to interest expense, so the account to be credited is a liability, and that is interest payable for 50 pesos. Now let us proceed to letter E. So the letter E correcting journal entry pertains to the overstatement of 2019 sales. So again, looking at these two columns, only net income has an adjustment, and this is a decrease in net income. So the account to be debited, since this is a decrease in net income, so to decrease net income requires a debit to a nominal account, and the nominal account to be debited is sales for 500 pesos. And again, since the adjustments in net income and retained earnings are not balanced, so the account credited is either an asset or a liability, and which in this case is a liability account, which is advances from customers for 500 pesos, because these are collections in advance for sales to be delivered in 2020. Then letter F, the last correcting journal entry, because in letter G there are no adjustments to the net income and retained earnings. So for letter F, our adjustment is deduction from net income for 80 pesos and increase in retained earnings for 80 pesos as well. So since these are equal, the adjustments are equal, we are not using an asset account or a liability account in our correcting journal entry. Instead, we are going to use retained earnings and one nominal account. And of course, the account to be debited is a nominal account in order to decrease net income by 80 pesos. And that is the account related to purchases. And again, similar to 2020, we are going to use cost of sales instead of purchases. So that is debit to cost of sales for 80 pesos. And the credit is retained earnings beginning for 80 pesos because we need to increase retained earnings by 80 pesos. So these are the correcting journal entries for 2019 so that we can prepare the restated balances in 2019, which will be presented side by side with 2020 financial statements in the comparative financial statements. Again, these correcting journal entries will not appear or will not be recorded in the books, because what is to be recorded in the books are the correcting journal entries that we have prepared as of December 31, 2020 and not as of December 31, 2019. Again, these correcting journal entries are only working paper entries in order for us to prepare the 2019 restated account balances. So now, since we are done with the correcting journal entries in 2019, so let us now prepare the adjusted account balances for 2019, income statement and statement of financial position. So let us start with the first column. So this will be the unadjusted balances. And again, these are taken from the information provided in the problem. So the net income is still at 217. The retained earnings ending is unadjusted at 1,617. Then the total assets is still unadjusted at 10,059 pesos. So everything is similar with the information in 2019. So of course, there are additional columns like prepaid magazine subscription and interest payable and advances from customers. So now, let us post our correcting journal entries. So these are the correcting journal entries that we have prepared as of December 31, 2019. And again, these are not recorded. These were only made in order for us to prepare the restated balances for 2019. So again, I will not post this one by one. I will just use formulas in order to facilitate the posting process. So these are the amounts posted from the correcting journal entries. Again, same procedure as we did in 2020. So these are the net effect of the correcting journal entries that we have prepared. So for the income statement section, So the debit side has a total of 585 and the total credit has a total of 225. And these two are adjustments to the 217 net income that is still unadjusted. And since the 217 is being close to the statement of changes in retained earnings, also the 585 and 225 should also be close to the debit side and credit side of the statement of changes in retained earnings under the row net income. Then the adjustments in the retained earnings beginning in our correcting journal entries will be posted in the debit and credit side in the statement of changes in the retained earnings under retained earnings beginning. Then we will get the total of the debits in the statement of changes in retained earnings section, so that is 735 pesos. And in the credit side of the statement of changes in retained earnings, we have a total credit of 305, so that is 80 plus 25. Then the 735 and 305 are adjustments to the 1,617 retained earnings that is still unadjusted. And since the 1,617 is being close to the statement of financial position, of course, the adjustments of 735 debit and 305 credit should also be transferred to the debit side and credit side of the statement of financial position in the equity section under retained earnings. Then get the total of the debit side in the statement of financial position. So the total is 960. And the total of the credit side in the statement of financial position is also at 960. So now after this, let us determine the adjusted balances that will appear in the comparative financial statements in 2020. So let us start with the income statement section. So we have sales, 3,000 pesos. Then the cost of sales is 900 pesos. So our adjusted gross profit is 2,100. Then for salaries, rent, depreciation, so the same amount as unadjusted because there are no adjustments. So that is 900, 700, and 300. But for the bad debt expense, it will be increased to 8 pesos. Then the magazine subscription from 360, it will be reduced to 135 pesos. Then the interest expense is 200. Then the adjusted operating result is unfortunately not a net income. Instead, it is a net loss of 143 pesos. Then the statement of changes in retained earnings, the adjusted retained earnings beginning is 1,430 pesos, and that is 1,500 plus 80 minus 150, so that is 1,430 pesos. Then the adjusted net loss is 143 pesos. Then dividends declared is 100 pesos. Then the adjusted retained earnings at the end of 2019 is 1,187 pesos. Then let's proceed to the statement of financial position. So the cash balance and receivable is still the same as the unadjusted amount. So that is 500 and 300. Then the allowance for bad debts is 6 pesos, which is the restated amount at 2% of the 300 peso outstanding accounts receivable. Then inventory supplies has the same amount as the unadjusted balance. Then prepaid magazine subscription has a balance of 225. Then for equipment, accumulated depreciation, and building, so these are same amount as the unadjusted amounts. Then for the accumulated depreciation for the building, it will increase to 200 pesos. Then land is 3,000 pesos. So our total assets at the end of 2019 is 10,179 pesos. Then the accounts payable is 442. Then we have new accounts, the advances from customers at 500 and interest payable for 50 pesos. Then notes payable is 2,000 pesos, share capital is 6,000 pesos, and the adjusted retained earnings ending is 1,187 pesos, which should be similar to the ending retained earnings adjusted as shown in the statement of changes in retained earnings. Then the total liabilities and shareholders' equity is 10,179. So since we are done with the preparation of the adjusted 2020 and 2019 financial statements, we can now prepare the comparative financial statements in 2020. So lastly is the preparation of the comparative financial statements. So again, our comparative financial statements includes the 2020 account balances, which is already adjusted, and the 2019 account balances, which is already at their restated amounts. So the income statement and the statement of financial position presented in our comparative financial statements were taken from the adjusted column in the working paper that we have prepared prior to this comparative financial statements, and that is the working paper for both 2020 and 2019. However, for the statement of changes in retained earnings, we cannot use the adjusted column in the working paper because the statement of changes in retained earnings that will appear in the comparative financial statements should present the effects of the correction of the prior period error to the opening balance of the retained earnings. So now let us prepare the statement of changes in retained earnings. So these are our labels. So let us start with 2020. So the retained earnings beginning in the first item is the unadjusted balance of retained earnings in 2020. So that is 1,617. And based on our table, it is taken from the ending retained earnings in 2019, which is the unadjusted balance. Of course, this is the unadjusted beginning retained earnings in 2020. Then the correction of prior period errors that is adjusted to the 1,617 pesos is 430 negative. So the negative 430 correction of prior period errors pertains to the net effect of all these adjustments in the retained earnings of 1,617 pesos. And this is the net effect of the corrections of errors from letter A to letter E. So if you are going to get the net effect of these adjustments, this is negative 430. So that is why our adjusted retained earnings at the start of 2020 is 1,187. And based on our table, that is the adjusted ending balance of the retained earnings as of 2019. Of course, this is the adjusted retained earnings beginning in 2020. Then, the net income to be added in our statement of changes in retained earnings, of course, is the adjusted net income in 2020 because the 1,187 is already adjusted. Therefore, the net income to be added must also be adjusted, and that is 260 pesos, so that the ending retained earnings adjusted for 2020 is 1,247 pesos. So now the net income to be added is 260 pesos. Again, this is the adjusted net income. And before we arrive at the retained earnings ending, let us deduct the dividends declared, and our retained earnings at the end is 1,247 pesos. And again, this is the adjusted retained earnings in our table of analysis. Now let us proceed to the revised 2019 statement of changes in retained earnings. Of course, the retained earnings beginning, which is the unadjusted balance, pertains to the unadjusted retained earnings at the end of 2018, and that is 1,500 pesos. So based on our table, the ending retained earnings in 2018 is 1,500 pesos. Then the correction of prior period errors that was adjusted to the 1,500 unadjusted retained earnings is negative 70. So the negative 70 correction of prior period errors is the net effect of the negative 100, negative 50, and 80 pesos. Then the adjusted retained earnings beginning 1,430 pesos. So our adjusted retained earnings at the start of 2019 is 1,430 pesos. And since the 1,430 pesos is already the adjusted beginning retained earnings in 2019, the net income to be added to the 1,430T should be the adjusted net income or net loss in 2019, and that is negative 143 pesos. And let us deduct the dividends declared, which is 100 pesos, and the retained earnings ending adjusted for 2019 is 1,187 pesos. So this is the adjusted retained earnings at the end of 2019. So we're done with the preparation of the comparative financial statements. So under PAS1, presentation of financial statements, so there are provisions under paragraphs 40A and 40B that is related to the change in accounting policy, retrospective restatement, or reclassification. So it states here that an entity shall present a third statement of financial position as at the beginning of the preceding period in addition to the minimum comparative financial statements required in paragraph 38A. If it applies an accounting policy retrospectively, makes a retrospective restatement of items in its financial statements, or reclassifies items in its financial statements, and the retrospective application, retrospective restatement, or the reclassification has a material effect on the information in the statement of financial position at the beginning of the preceding period. Then in paragraph 40b, in the circumstances described in paragraph 40a, an entity shall present three statements of financial position as at the end of the current period, the end of the preceding period, and the beginning of the preceding period. So this is the guidance under PAS1 about the presentation of statement of financial position if there is a change in accounting policy, retrospective restatement, or reclassification. And since we have corrections of prior period errors in our problem, and we are required to apply the correction retrospective, that is why the amounts presented in the statement of financial position in the prior periods are restated. That is why we are going to apply this standard, which is the preparation of a third statement of financial position. Also, a third statement of financial position will be prepared if there is a change in accounting policy. The minimum comparative financial statements to be presented should include at least 2 years of financial statements. However, in this situation, the standard requires us to present a third statement of financial position. And what are the statement of financial position to be presented when there is a change in accounting policy, retrospective restatement, or reclassification? So first is the end of the current period. So in our problem, the current period is 2020. So that is letter A. Then letter B is the end of the preceding period. So the preceding period in our problem is 2019. So for letter B, that will be December 31, 2019, which is the end of 2019. And in letter C, this is the beginning of the preceding period. This pertains to the opening balances of real accounts in 2019, which is the ending balances in 2018. However, since we have no information about the 2018 account balances, we cannot prepare a third statement of financial position. However, if we have 2018 information, it means we can prepare a third statement of financial position, which is the beginning for 2019, which also be restated and must already include the effects of the corrections of prior period errors. So again, this is our comparative financial statements for the year 2020 and the revised financial statements for 2019. So this is our discussion on the correction of prior period errors and the presentation of financial statements.